and today I'm going to be talking about how I've missed out on thousands of dollars on the stock market. I'm going to be going through some of the positions that I sold out of that I should have held, investing in some companies that I should have never invested in, and not selling when I should have locked in some gains. So today's going to be hopefully providing some lessons for others and just a bit of reflecting on my overall journey as well, on how I've built this $103,000 stock portfolio. Again, it hasn't always been gains. You can see at the moment I'm up 33% in total on my stake portfolio, and in my Vanguard portfolio I'm well in the green as well. But it hasn't always been this way. If you go check back some of my older videos, there were times in 2022 when my stock portfolio was down over 20%. It's been a very good recent few years, and that's meant that my stock portfolios have gained value, especially some of my big positions, such as VOO, which tracks the S&P 500, Microsoft, Google, Amazon, and Apple. Costco included, they've all had good years. But I wanted to go through today some of the positions that I regret selling and ones that I made bad decisions on. The first stock that I wanted to cover is Meta. Metas have been a very popular stock this year, and it's been in the news a lot and is up 55% alone. If you have a look at the last 5 years, the stock's also up 250%. And you can probably guess where I sold the stock. I sold the stock back in 2022 down here after the stock tanked. If you can remember, at the time Meta was going through a lot of issues around its Meta Quest and its virtual reality stuff, and they were losing a lot of money on the topic and investors weren't very happy. During this downtime is when I sold. That's actually when many smart investors were buying in. Since then, Meta really changed its way. They started mentioning it less in their earnings call. They started shifting to profitability and having a real focus on that. And if we look from the start here of 2023 all the way up to where it is today, it was sitting at roughly around $135 a share and is now trading at over $736 a share. This was a position, again, whilst I was down then, I didn't have enough conviction in. This is an important lesson for any investor, and that's to really understand your investments. There's no point in investing in a company just because you've seen hype around it or you've seen YouTube videos like this saying this is a good company to invest in when you don't truly believe it. Because what that will lead to is you selling out at very unfavorable times. Times when the market is down often provides the best time for buying opportunities for companies you really believe in. And that's one of the ways I've made most of my money in this portfolio, is by doing that. But Meta is a company that I really lost out on. There was lots of thoughts around, can it still keep its momentum? And was this a change for Meta when it was going through the change from Facebook to Meta? And this was something I didn't want to go through. Again, even though I ended up selling at a loss at around 500 USD, I believe I lost on the trade. But with that money, I decided to invest in other companies such as Apple, Microsoft, and so on. So whilst I did make money in the other companies, the returns that I would have got by just holding through Meta potentially would have been even better. The next company that I invested in that I sold recently more often was JP Morgan. If we have a look at JP Morgan stock, this was a staple in my portfolio at the time. If we have a look at just the last year alone, it's up pretty much 55%, which is very good, beating out the market, beating out a lot of the tech giants as well. This was a stock that I actually sold at quite a good gain, around 80%, but I sold it a bit early. I sold the stock when it was around 220 or around this part here. Since then, if we have a look at the last 6 months, the stock is up 30%. What this means is I've missed out on a lot of good gains there when a lot of my other companies, such as Microsoft, which I'll go into later, traded very flat. This means I left money on the table. One of the reasons I decided to sell JP Morgan, again, was that conviction side of things. With interest rates going up, there was worries and people speculating around defaults, whether that be commercial lending or just consumer lending. Obviously, banks do make a lot of money when it comes to high interest rate environments because they pass those costs on to the customer. But it was a company I had in my portfolio for a while. One of the reasons I also loved it was it offered me some more diversification. As you can see, my portfolio is very heavy into tech. Excluding Costco, all the other major players are all heavy big tech giants, and even the S&P 500 has been criticized for being heavily invested and overweighted to the big tech giants such as Netflix and the overall Magnificent Seven, the rest that I also own, like Apple, Amazon, Google, and Microsoft. Overall, I wish that I held on to my JP Morgan shares. Whilst I did make a good gain, I decided to sell out and I left a lot of money on the table, and I left that extra diversification for my portfolio. So when I look back now, JP Morgan is a key position that I wish I held on to and I shouldn't have sold due to lack of conviction. Another mistake I made was investing in companies, again, I did not believe in. One of the key ones that is on this, and I've seen a lot of other people mention it, is a stock that had a lot of momentum a few years back, and that is Alibaba. Having a look at Alibaba stock, if you look at just the last month alone, the stock is actually up 52%, but don't let that completely fool you. If you have a look at the last year, whilst it is up 70%, if you have a look at the last 5 years, which is back when I was investing, the stock's actually down 40%. And when you compare that to the overall S&P or other big tech stocks, which might have been up 100, 200%, that's when you can see how much money you really lost. But Alibaba is a stock that I held back in 2021 and 2022 and sold it at a loss, and like Meta, I sold and lost around 500 USD. Again, this was when my stock portfolio was a lot smaller, so at the time, hanging a loss like that really did hurt the portfolio value. But again, this taught me a crucial lesson of investing in a company I really didn't understand in a foreign country as well. The Chinese market had a lot of momentum back then, with stocks like NIO and Alibaba, which got investors from all over the globe. Lots of YouTubers were doing content on it, and at the time it sounded like a really good idea to look into the company, which I did, and it did seem like a good investment at the time. But again, I didn't have that foundation and that belief in the position, which led me to selling when I did, which in the grand scheme of things was actually a good idea because of how continuously bad the stock has traded since. But it meant I had a loss on my portfolio, and what that also meant was a really good lesson going long term. Never again did I invest in a company that I didn't really believe in as much, or a foreign company like in China as an example. Whilst I do invest in US companies not being based there, I have a lot more belief and a lot more trust in their system and their overall companies. There is sometimes fears around Chinese companies if they can get shut down or what the government can do to them, especially with many of them having a board seat. So that was a lesson for me moving out of the company. Again, this doesn't mean that the company's bad. It just meant I didn't have a full understanding of what the whole situation was holistically. Another good example of this is the NIO stock. This company is actually an interesting story. I actually sold this company for a strong gain. If you can see here, the stock had a really big rally back in 2021, sold off then, but then bounced all the way back up, and I actually sold it for here in the 40s. This is before the stock completely tanked, and I managed to actually lock in some gains. Again, this was another one of those stocks that I'd seen online with content creators covering, but I didn't have a full understanding. At the time, I was also investing in companies like Tesla, and just kind of those main companies at the time that were getting a lot of traction. I'm very happy that I did sell my position in NIO, but it was mainly down to luck and fortune that I sold it when I did, locking in good money. Because if I was to have held this company for the last few years, I would have really taken a bad hit on my portfolio. As you can see, it's down over 27% just this last year alone. So those are some companies again where I didn't have the right conviction going into it, and I didn't have a holistic understanding of the environment the company operates in. Next one is a bit different. It's one of the positions I still hold, and it's actually my biggest individual stock holding, and that is Microsoft. But the reason I'm bringing up Microsoft is similar to what happened with Apple. Whilst I do believe in Microsoft, there was a time where this stock was extremely overvalued in my opinion, and I should have locked in some gains. What I'm mentioning is back here when the stock was trading at almost $470 a share. The PE ratio was very high for Microsoft, and what this meant was everything was being priced in. This is time when there was a lot of AI hype with the likes of ChatGPT and things like that and their acquisition, and at the time I was just riding the wave. I still believe Microsoft is a great company, hence the reason why I own it, but when it's trading that expensive, you really should not get too in love with your position. Again, I have not sold the stock, but it's traded flat this last year at 1%. And if you look at the S&P trading at around 20%, I've pretty much given up 19% returns there and extra income through a larger dividend, and better diversification. So this was a really bad decision at the time. Again, the reason why I mentioned Apple stock is because Apple's actually a position that I did sell out of at a recently good time here when it was trading quite high, and I used that money to invest in other companies. This is right before Apple decided to dip. It's recently gained back some of that momentum, and again, I still hold a strong position in Apple at around 3,400 USD in equity, but I took some gains off the table and allocated it elsewhere where I think long term I could get better gains. That's what I should have done with my Microsoft position, but I wasn't focused on it and I was too busy riding the high and not actually paying attention to the PE ratio and the underlying factors on the company. So this was a good lesson for me to not fall in love with the story. Similarly, this has mainly been a factor with my stake portfolio as I invest in individual companies here. My new Vanguard portfolio, but when I say new, I've obviously been doing it for a few years, is a lot more diversified. But the likes of VLC and VGS, I still need to keep on the top of my mind whether these are the right places to put my cash. So I'll do more on that in the future, but I wanted to kind of just go through today and kind of speak about some areas that I made bad decisions and lessons I learned that can hopefully help other people. Overall, just reflecting back on it, you need to remember to have strong conviction on all your holdings so you don't sell at a bad time, and maybe even understand that that could be a good time to further invest in those companies and buy them at a discount. So feel free to share any companies that you've invested in that were a mistake, or any lessons you've learned similar to this in the comment section. I also recently hit 1,000 subscribers, so again I wanted to say thank you to anyone who's watched my content or subscribed, and I plan on continuously doing more and more content for people to see and hold myself accountable to continue to invest in my portfolios and share my journey on YouTube. Thank you.